Hey everyone, welcome back to the channel. I'm here to give you a quick roundup of today's Wall Street action for July 29, 2024. Let's dive right in. First up, the S&P 500 saw a slight uptick, but it couldn't break past the crucial 5,500 level. There's still a lot of bearish sentiment hanging over the market. Even though we've seen some reduction in CTA fund selling, it's not enough to turn the tide just yet. Large options dealers are holding significant short positions, adding more pressure. On the bright side, positive earnings surprises might offer some temporary relief, but don't get too comfortable. The overall market is still susceptible to a pullback, especially with key economic data and corporate earnings around the corner. Keep an eye on those numbers. Next, let's talk about the U.S. Treasury's quarterly refunding plans. They're expected to borrow around $740 billion in the coming quarter. This is pretty much in line with market expectations, influenced by lower tax receipts and reduced Federal Reserve asset purchases. Now, why does this matter? The Treasury's borrowing activities have a huge impact on financial markets, particularly interest rates. The recent decline in long-term interest rates can be linked to the Federal Reserve's quantitative tightening measures and the Treasury's debt management strategies. These actions shape the yield curve and market liquidity. Analysts are closely monitoring the interplay between the Federal Reserve's monetary policy and the Treasury's borrowing needs. The upcoming economic data releases, including inflation and employment figures, will provide more insights into the potential direction of both fiscal and monetary policy. Moving to the global stage, European markets closed lower today. The Euro Stoxx 600 dipped by 0.20%, and the German DAX lost 0.53%. Wall Street's weakness and economic concerns weighed heavily on sentiment. Travel and luxury sectors were among the worst performers, while the banking sector showed some resilience. Over in Asia, the picture was mixed. The Japanese Nikkei 225 rebounded by 2.13% after recent losses, but Chinese equities remained under pressure due to growth concerns and regulatory uncertainties. Several important economic data releases from China are coming up and could impact market sentiment. Back in the U.S., the Dow Jones Industrial Average ticked up slightly, while the NASDAQ Composite edged down. The energy sector outperformed as oil prices rose, and Tesla shares surged following strong earnings. Investors will be closely watching upcoming corporate earnings reports and economic data releases for further clues on the market's trajectory. Notably, Microsoft is set to report its earnings tomorrow after the market closes, which could have significant implications for tech stocks. That's it for today's Wall Street highlights. Don't forget to like, subscribe, and hit the bell icon for more updates. Thanks for watching, and see you next time.